Hey, what's up guys? Aaron here. So right now we are living through the greatest wealth transfer that has ever existed. I'm going to give you some proof starting out with this very important slide right here, talking about the total addressable market and if Bitcoin captures a very small percent of that, what that would mean to the price of Bitcoin. But even this 200 trillion coming into Bitcoin, which would mean a $10 million Bitcoin, is actually too low because Bank of America in 2021 said that there is a 100 to 18 multiplier when it comes to how much money comes into Bitcoin and how much that actually changes the price. So basically what we're watching right now is the price of Bitcoin going up and more interest coming into the space. And every single asset manager will eventually be offering Bitcoin to their clients. We saw Fidelity Canada offering between 1 to 3% in their growth ETFs to their clientele. Soon that will be everyone in the United States and, in my opinion, internationally. And I think it'll be more than 3%. I think that they will be offering 5, even 10% allocations to Bitcoin in their ETFs. I want to start out with a couple charts though. The first one talking about the compound annual growth rate. So Bitcoin's compound annual growth rate hit a multi-year high above 64%. The NASDAQ is just 27%. So anybody looking at Bitcoin is like, wow, it has done tremendously better than even NASDAQ, which has done insanely well over the last 4 years. Here we see the yearly lows for Bitcoin, and anyone who's intelligent is like, okay, the number is going up over time. Basically, in any 4-year period, number goes up. So that is going to bring more and more capital into Bitcoin, which again, I'll cover right here in just a bit. And we all know we have the halving happening this April, which is going to cut the new supply of Bitcoin in half. So we're going from 12.5 new Bitcoin unlocked every 10 minutes to 6.25 new Bitcoin unlocked every 10 minutes. And what that does, as you can see in this chart, is it usually signifies the beginning of a new bull market. And this is a chart that is incredibly important to remember for anyone who doesn't really understand the power of Bitcoin versus fiat US dollars or any fiat currency for that matter. Here we see the total debt of the US government hitting new all-time highs of $34.38 trillion. And what this means right here is that there is an infinite amount of fiat US dollars that can be printed, but there is a capped supply of 21 million Bitcoin that can ever be created. So as the US government and many governments continue to rack up their debt and print new dollars to pay the interest on previous debt, we know that there will never be more than 21 million Bitcoin. That is something that we know with certainty. And before I go over this chart, I first want to talk about the logarithmic regression bands. We can see here we are not in bubble territory yet. So in previous cycles, the price of Bitcoin eventually hits these red lines, and that is usually when we see the tops for the prices of Bitcoin for that cycle. Right now, we are nowhere near the red bands. Right now, that would be around a $176,000 Bitcoin or so. But this cycle is different than every other cycle, primarily because of the ETFs. The Bitcoin ETFs have been the most successful ETFs out of any ETFs ever created. And for the companies that do not want their customers, their clients, to invest in Bitcoin, like Vanguard. So I don't know if you knew this, but Vanguard said we will not offer Bitcoin ETFs to our clients. You can't buy it on Vanguard. Well, I don't know if this is a coincidence, but 2 days ago, the CEO decided to step down. Did he get fired? Who knows? But it's pretty interesting that only after about 30 days after the Bitcoin ETFs have come out, the CEO of Vanguard, Tim Buckley, who has been with Vanguard for 6 years, decides to step down, possibly under the pressure that he got from people who wanted to buy Bitcoin ETFs. I don't know. At the end of the day, those companies that do not offer Bitcoin to their clients will not make it. So right here, let's talk about what the store of value proposition means. So there is something called total addressable market, and this is in the trillions of dollars. There is $12 trillion in gold, $6 trillion in cars and other collectibles, $18 trillion in fine art, $115 trillion in the stock market, $330 trillion in real estate, $300 trillion in bonds, and $120 trillion just sitting in money. These are all things that individuals purchase with dollars in order to hopefully keep their purchasing power or have their purchasing power go up because they think that all of these will increase in value. So these are the estimates of what percent of these categories Bitcoin could capture. Gold, Bitcoin could easily capture 50% of that market because Bitcoin does everything that gold can do and better. 5% of cars, 5% of fine art, 15% of the stock market and real estate, and 30% of bonds and money. So that would mean there would be $200 trillion coming into Bitcoin. And that would just 1-to-1 be a $10 million Bitcoin. And how they got to that number is right now the market cap of Bitcoin is, let's just round it down to say $1 trillion. It's technically $1.2 trillion now. So 200, meaning 200 trillion times the current price of Bitcoin would be around that $12 million per Bitcoin price. But again, like I covered at the beginning of this video, Bank of America in March of 2021 said that there is a 118 multiplier for how much money comes into Bitcoin versus how much it affects the price of Bitcoin. So Bank of America says that it would take around $92 million, that's it, $92 million to move Bitcoin's price by 1% based on this March 2021 data. But all that means is that the estimate of a $10 million Bitcoin is actually very, very low if Bitcoin does capture these percentages of these store of value assets. So all that said, to get you guys very excited on what we have in front of us and what will be coming, in my opinion, over the next several years and definitely over the next decade. So what do you need to do to take part of this? Well, obviously have some Bitcoin. And if you want to have other altcoins, be my guest. I will talk about those, but most of this money, in my opinion, is coming into Bitcoin. They have the absolute regulatory clarity with the Bitcoin ETFs, and there is no wishy-washiness regarding, is this going to work or is money going to come in? All the banks are coming in, everybody's coming into Bitcoin. And what do you do to make sure that you don't mess this up? Well, don't overly trade. Definitely don't take out leverage. Just hold spot Bitcoin, hold spot ETH, whatever you want to hold, and don't do anything risky. Don't try to do anything that your fear-based brain tells you to do. And if you've been through previous cycles, you know how tempting it is to sometimes want to sell, trade, take leverage, do some risky stuff that can put your coins at risk. And ultimately, what you need to do is mostly nothing. Yeah, there will be some times maybe to take profits, and I'll talk about that in future videos, but ultimately it's just keeping your coins safe. Don't mess it up. Don't do anything stupid, and sit on your hands. So guys, that is it for the video. Make sure to subscribe if you have not already. Till next time, guys, talk with you soon, and bye for now.